Oh my goodness, guys. The stock market is absolutely insane. We got to break down what happened today, what's going on after market hours. We have to go over some earnings reports, and of course, what I'm doing and my thoughts on everything going on. So if you all find value, hit the like button, subscribe. Make sure to join my Patreon if you want all my moves, Discord access, morning update videos, call outs. All of that's on Patreon, link down below. And you could also get 5 stocks from Moomoo. Use my link, deposit $100, and you could get up to 5 stocks, each of which are valued all the way up, potentially to $3,500. Get your money and join my Patreon, link down below. And with that being said, let's talk. So the markets today, throughout the intraday session at least, got destroyed. We had the NASDAQ 100 close officially down over 4% on the day. We had the Russell down 1.9. We had the NASDAQ, or rather the S&P, excuse me, guys. S&P went down 2.3, and we had the Dow Jones, which got hit the least, but it still had a pretty rough day. It lost 500 points, down about 1.4%. And then when we had Amazon report earnings, which we'll talk about in a second here, the markets ended up ripping, guys. And we have a couple of other stocks which are having mind-blowing rallies after market hours. Hint, hint. Snapchat, which completely is blowing my mind right now, and we kind of did call what's going on with Snapchat. We called it out in the video prior to this one, and we'll talk all about Amazon, Snapchat, and the other earnings reports in a couple of minutes here, so make sure you guys stick on throughout. But first, let's take a look at the overall indexes. Again, we got hit today. It was a rough day, a lot of volatility. The VIX went up over 10%, and like I said, we are rallying after market hours, but let's still take a look. Let's see what's going on. So on Triple Q here, which tracks the NASDAQ 100, the tech heavy index, excuse me, guys, we're noticing a bit of a head and shoulders on this 20-day chart. Look at this. I'm seeing this clear head and shoulders, which if it lets me get my oval tool, there we go, guys, we'll be able to see it. We have the left shoulder, we got the head right here, and now we have the right shoulder, which is forming. I mean, literally today, the entirety of today has been the right shoulder of this head and shoulder pattern. And we see the neckline is right around 363. And that's very important because now that we're rallying after market hours and we're seeing buyers stepping in right by the 180 moving average on this 20-day chart, and we're bouncing above 355, which I've mentioned is a big level of support for Triple Q. Now that we're seeing this, we're getting back to the neckline. And if this head and shoulders is legit, we're going to fail at the neckline again, and we're likely to dump under 355 and maybe start going back into the 340s. But listen to this. The bulls need, if they obviously want to continue this trend that we're seeing after hours, the bulls need to break the neckline. So the moral of the story here is, guys, what's going to happen at the neckline? Are we going to get the bulls breaking out of there? Maybe we start going back to 370. If that were to happen, the head and shoulders is out of the window. It's in the trash. We're breaking out at that point. But if we fail at the neckline again, 363, 365, and right now, mind you, we're at 360 after hours, so we're not breaking out of the neckline yet. If we fail there, we start going back to the 350s. That would not be good whatsoever for the bulls. So watch out for that. I'm telling you, that's very important on this 20-day chart for Triple Q. And let's see, do we have an inverse, or rather a head and shoulder, a regular head and shoulder on SPY? Not entirely. It's a bit different looking. I mean, I guess you can maybe say that's a head and shoulders. Let's see here. Excuse me, guys. Let's see here. Left shoulder, head. This is a very sloppy looking head and shoulder, but I guess we could say it is. Fine. All right. If SPY breaks under 448, like we've been saying, that's where this head and shoulder will gain some steam. The right shoulder, at least, will probably get us down to 440, maybe even lower. But if we start taking out, let's say 453, 455 on SPY, which right now after hours we're at about 452, that would be very good for the bulls. So keep an eye on these levels, guys. That's all I'm trying to say. And my ring light is flickering right now. You guys probably can't tell, but it's kind of weird looking at this thing right here flickering in my face. It's all good, guys, because Amazon's earnings, Snapchat's earnings, these were unbelievable. And before we talk about those, if you all are finding value in the video, make sure to hit the like button, subscribe if you want more content like this, and drop me a comment. Doing those 3 things really helps me out in the YouTube algorithm, and I do appreciate each and every one of you out there watching. Seriously, you guys are awesome. So before we talk about these earnings, let me get some good old water. Hold on a second, guys. All right, so Amazon, let's pull it up. This, and I mentioned in my video earlier, guys, we talked about this. Amazon was down 7% at close, almost 8%. So it was falling because of Facebook, and it really was because of that. People were nervous Amazon was going to drop the ball as well, right? So it was already pricing in a bad report for the most part. And I told you guys, if they reported decent numbers, this thing could end up rallying. It could end up ripping. And that's exactly what ended up happening. It's nuts. They did EPS of $27.75 versus the roughly $3 estimate. Did we not talk about the estimates earlier? It was about $3 roughly. In the previous video, I mentioned that. And they did $27.75. And I think adjusted EPS, I mean, it did. It came in at $5.80. So I guess unadjusted, it was about $27. And revenue came in right in line. It actually missed slightly. It came in at $137.4 billion for the quarter versus $137.6. So it barely missed, but it did miss nonetheless. And they see Q2 sales a little bit under estimates. I guess a bit under estimates. 112 to 117 billion versus 120.5 billion estimated. So I guess it wasn't numbers-wise the best quarter. But from what I'm seeing, they're obviously still growing year over year. And it's weird. That's how things work sometimes. I mean, they didn't report the best quarter, but I guess since it wasn't bad like maybe Facebook's, the stock's running. I mean, it's weird, the psychology behind this. I'm not really seeing a clear-cut reason why Amazon is ripping. Maybe it's because of their profit beat. It's got to be that. And here it says, Amazon's profits show resilience even as labor supply crunch weigh on results. Okay, that's from the Wall Street Journal. That makes a bit of sense there. So yeah, adjusted EPS came in at 580. That crushed the 367 estimate. So that's probably it. They're making money. They're profitable. Their profitability beat the estimate. So that's got to be a main contributing factor to the fact that the stock went from $27.76. Now it's trading at $31.90, and it was at almost $3,300. It was at $3,300 earlier in the after hours. So Amazon is ripping. We're obviously seeing a rally in the overall markets after hours due to this. Look at Triple Q. Triple Q's up a good 2% after hours. We have SPY up about 1%. So this is very good in the short term for the overall markets. Now, will this green last? Honestly, guys, my guess is as good as yours. What I've learned so far in 2022, and I kind of expected it heading into 2022 because, I mean, the writing's on the wall. I think more volatility is going to come, and I'm not going to be surprised if it does because that's what we've been seeing the past couple of months. It's at this point I'm getting used to it. So we might see a huge push tomorrow, but don't be surprised if next week we started selling off again. I mean, that's just the nature of the markets that we're in right now. So great, I mean, not great quarter, but decent quarter from Amazon. The stock's running. It's dragging up the markets, which is great. Now, Snapchat is the one that completely blew my mind. Did I not say this in my previous video, guys? Not to toot my own horn, but did I not say Snapchat is known for these violent, insane moves in either direction. We talked about their previous earnings report where the stock went from 75 to about 50 in a day. It dropped 30%. The report before the previous report, so 2 reports ago, the stock went from 57 to about 80 in a couple of days, so it ran up 40%. This is nothing out of the usual. And I was going to sell covered calls on my Snapchat position on, when was that? Yesterday or maybe the day before. And I held off on it because I knew something like this could happen. I knew it. And it's good that I didn't sell covered calls, because if I did, I would have to cough up my shares at a much cheaper price than where it's trading at now, because after hours, get this, guys, and mind you, the stock went down 23% today, but after market hours, it went up not 30%, which would be nuts. 30% is crazy. Not 40%, not 50%, but 60%, guys. It was up over 60% after market hours, which is just ridiculous. 60%. I mean, it went from $24.75, guys, to almost $40 a share in a couple of hours, in an hour or two, on pretty good earnings, pretty dang good earnings. I'm not going to lie. 22 cents is what they did on the bottom line EPS versus 10 cents. So they doubled up the estimate. They crushed earnings. EPS revenue came in at $1.3 billion versus $1.2 billion. So they beat EPS. They crushed revenue. They increased daily active users 20% year over year to 319 million, and they see Q1 sales above estimates. So, I mean, this is great. The Q1 sales, $1.03 billion to $1.08 versus $1.02 estimated. So, great numbers from Snapchat, nice user growth, good guidance. Let's see here. Anything else? I mean, geez, what else do they need? That's all they need for the stock to go up, and it's going up in a major way. So I'm personally happy as a shareholder. I can't complain. Whenever you see your stock go up 60%, I mean, what the heck else are you're gonna be happy, right? I mean, I was shocked. I was watching CNBC, and I saw it pop up 10% initially, and I'm like, okay, good thing I didn't sell those covered calls. I saw it up 18%, 24%. It was at 30%, and I'm like, come on, this is not going more, is it? And then I saw it up 60%, and my jaw dropped. I mean, I haven't seen something like that in a long time. And Snapchat's not a small company, guys. It was a market cap. It had a market cap of $38 billion today at close, $39 billion at close. I'm looking at it now on Yahoo Finance. It's got to be what? $60 billion now? 55, 60, $65 billion market cap. That is insane. So, yeah, Snapchat ripping. It's ripping, guys. Pinterest. Pinterest, too. I mean, this thing is nuts. Pinterest closed down 10% on the day today. And now after hours, and mind you, it closed at $24.50. After hours, it got all the way to $32, meaning it was up 30+% at one point. And now it's sitting at about $29, so it's still up. It's up about 20% now, but it has come down about 10% from from where it was up 30% after hours. But still, it's up a lot, guys, 20%. And they did pretty well, too. They beat EPS, beat revenue. And we can see here, well, I guess you can't see it. I can see it. EPS came in at 49 cents versus 45 cents estimated, so they beat that by 4 cents. Revenue came in at $847 million versus $827.16, so double beat. And the funny thing is, guys, Q4 global monthly active users are down 6% year over year. So their monthly active users are declining year over year for Q4, but the stock is still up. It's crazy how things work. I guess that's just for Q4, though. Let's see. I don't know. Well, I don't know why the stock's moving up on that, to be honest. Let's see here. I'm not really seeing why. But that's the crazy thing about the markets. Like I always say, guys, things happen, and you got to kind of dig a bit deeper to realize exactly why it's happening. Maybe it's in the earnings call, something like that. I have to go look into it myself, but I don't know. It's weird. You know, they had a double beat, but if you see that monthly active users number declining year over year, you might think, wait, stock should be down, but no, it's not. It's moving up, guys. That's what's going on. So that's Pinterest. Let's talk about Ford. Ford is selling off after market hours. It is currently down to 19 a share. It was down on the day, too. It went down 3.6% at close. It closed at about $19.90, so it is down a good 90 cents after market hours here. Hold up, guys. Let me get some water again. Something's going on with me today, guys. This morning on Patreon, too, on the Patreon video, I could barely record. I was freaking coughing every 2 minutes or clearing my throat up. I don't know. We'll see. We'll see. I think I'm fine, but who knows, right, guys? Ford, ticker symbol F. They're down, like I said, about 90 cents after hours. And we have, let's see here, EPS came in, adjusted EPS came in at 26 cents versus 45 cents estimated, so that missed wildly. We had revenue of $37.7 billion versus $35.52 billion, so they did beat revenue by about $2 billion, but they missed adjusted EPS by a lot, and the stock is down. It's getting punished for it. I mean, that's just the reality. Let's see here. CFO says launch of F-150, a Lightning electric pickup, remains on track. That's good. If they were not on track or if they were backed up, that would be hurting the stock, that's for sure, at least right now. Let's see here. They adjusted EPS lower, revenue higher. Do we have any guidance? I'm not seeing any guidance here, but overall, it's selling off. And quite honestly, guys, me being a bit of a selfish guy here, I want Ford to come down. You know, I'm not in Ford. All you guys and gals in Ford, you're probably like, Stas, shut up. We want Ford to go up. Well, I want it to come down. I'm sorry, guys. I said it. I want it to come down because this is a stock I want to own. I think I've mentioned this on video before. I've mentioned it for sure. But this is one that I regret buying, or not buying, rather. It was at $4 in the March 2020 crash. I probably would not have bought it at $4 just because there was other stocks during that crash that I liked more. But I wish I bought it on the rebound, you know, maybe a couple months after the crash at $5, $6, $7. Anything under 10 on Ford, in my opinion, is a complete steal. And I just feel like an idiot for not buying it. And now that it's at 20, I mean, I don't want to force it at 20, considering it's gone up so much in the past year, 2 years. Selfishly, I want it to come back down to about 15, 13, 14. I mean, if it came back, it's probably not going to come under $10 again, guys. But if it came to, let's say, 15, maybe 14, that would be a spot where I would consider at least starting a position. But here at 19, I'm cautious. I would trade it. I mean, I would trade it at these levels, but as a long-term investment, I'm a little bit cautious here. Let's talk about Activision, the last one on the notes for today. Activision Blizzard, which you guys know, this thing has been insane. I mean, I used to own it. I bought it as a trade at about $58 before this huge spike when they got bought out by Microsoft, right? And the spike happened. And I sold after the spike. I forget exactly where, but I made a ridiculous amount of money on this. And now it's been consolidating ever since that. And let's see what they did for earnings. So they did about $1.25 adjusted EPS, not bad. And they did adjusted sales of about $2.49 billion. And I'm not really seeing the estimates here or anything on guidance. But at this point, I think they got bought out for $90 a share. I think Microsoft bought them in an all-stock deal, $90 a share. Now it's at $78 a share. Maybe it comes down a couple of bucks, but honestly, I think anywhere from 70 to 75 on Activision. If it does fall a little bit more here, that might be a dip buy for a nice little trade, maybe a longer-term entry if you guys want to. I don't know. But for me, I'd probably be looking at it as a trade, 70 to 75 bucks a share. For real. I mean, that might be a decent spot. So, yeah, I think that's it for today, guys. Crazy, wild day, swings like no other, and I'm not surprised. I mean, we've been calling this all month. or for the whole year. I mean, the whole month and 3 days that we've had so far in this year. We've been talking about this volatility, and if you've been watching my channel, you really should not be surprised. So what do you think? Will this rally last after hours? Is it a bull trap? Is Amazon going to dump? Is Snapchat going to continue this insane 60% rally tomorrow, next week, the next couple of weeks? What do you guys think? Drop me a comment, hit the like button, make sure to subscribe, and join my Patreon if you want all my buys, sells, call-outs, morning update videos, Discord access, plus more. All that's on Patreon, link down below. And you guys could also get 5 stocks from Moomoo. Use my link, deposit $100. That's linked down below, and you could get up to 5 stocks, each of which, get this, guys, could be valued up to $3,500. Get your money from Moomoo. Join the Patreon. I'll catch you guys in the next video. Thanks for watching. Peace out.